giving back a few dollars. That's okay. Now, what I'm thinking is I'm still confident we're going to have some technical pullbacks. What I'm going to start doing is I'm going to give a free trade today if you're interested in some silver. It's going to be out in the distance. I think that right now, if we have this conversation 12 months from now, 24 months from now, silver at $46 could be seen as, wow, remember when it was 50 bucks and that was the all-time highs, and now it's insert number that's way higher, 60, 70, 80, $90 an ounce, $100 an ounce. Look, technically this chart is starting to look really, really ridiculous. This is now, I think, 9 weeks in a row. If we go XAG, this is 9 weeks of bullishness in a row, and it has obviously covered a lot of ground. You go from this last little low here, we are at 26 weeks that is mostly bullish. So yes, we've had some pauses in between, but basically 26 weeks from this low to high swing. But I'm looking more importantly at these last like 9. These are 9 candles in a row. Usually we don't see candle cycles last more than like 11. So weekly highs, daily highs. I mean, it gets to a point where it's like, I want to say Meta at one point when it was like 20 closes higher and then it dropped double digits. We have been climbing higher on silver in a big way. We're stretching further and further away from all these moving averages. So the trade I'm going to look at here is I looked at gold futures this morning. I looked at SLV this morning. The nice thing about SLV is I can go out to 2028. I'm going out long term, but what I'm going to do is if I start to get the pullbacks that I want, I'm going to put in a bull call spread here. And if we get pullbacks, another one and another one and another one. This is like a DJ Khaled trade. I'm going another one all the way down, and I'm putting these all out to January of 28. And I will just define the risk with the bull call spread. I'll give myself room for any type of pullback. But if each one of these trades for me is like a 0.5% risk, I can stack this up to still add, maybe 0.5% on each trade. Maybe I get 5 trades in. So I get, I don't know, 2.5, 3% of gains. If I want to go 1% risk, I mean, well, I'm talking about an allocation of 10, 15% to silver. So if I'm looking at individual option trades and then wanting to buy some shares at some discounts, I can also kind of pad those stats and those gains with maybe taking a 1% risk. So I'll do that this morning when we have opening bell on SLV. I'm probably going to do like a 5 wide, at least starting out for today. And then any dips and pullbacks, they'll do the same thing. And I'm just going to keep a very close eye on silver over the next, 30, 60, 90 days. I do have some shares. I did buy shares still, even though I dumped positions, but those shares are collar trade like we talked about this week. I bought the shares, I sold a call, and I bought a put immediately. So right now that put is losing value as prices continue to go higher. If SLV gets over $50, then that is above my sell call. So I'm capped on my upside here, but that's what I chose to do in order to basically finance the downside in case this has any corrections. So if we're opening up around like 46, I'm going to look at a 45 by 50, 45 by 50 spread. Okay. So we'll talk about that when we have opening bell. Here we are. Opening just a little bit higher. Futures was flat all night. I saw it was mostly, light red this morning, like 0.01, 0.03. Now it's 0.5 or 0.05 positive. I put this daily profit indicator at a 67.53 close. That's where we ended up closing yesterday. That 50 to 55 part of my daily profit play. It was a partial loss yesterday. We didn't take a full loss. If it was a full loss, it would have been above 67.55. So today we have new levels. Our larger level, we are back into positive gamma territory, just like we were yesterday. We stayed positive gamma above 67.25. It stayed there all day. Today, above 67.45, we stay positive gamma. Directionally, we're not going to have a huge gap to the upside, but is it flowing to new highs again? The biggest magnet up here towards 75, 80, 85, plus minus on the day. Volatility did drop a decent amount yesterday. So SPX for the market maker move today is 21.44. I'm assuming that yesterday's 27.28 plus or minus move was because of FOMC minutes. That turned out to be a freaking nothing burger. Today we have no data. Tomorrow we have no non-farm payroll. So probably just like a 20 plus point, up or down, slow drift. We will see. But if we're opening up at, 53 and I can sell 80, 85-ish, I mean, the VIX is still above 16, but if I can sell, again to these highs, hopefully this call resistance holds. I'll look at some ATR levels as well. 50% ATR at 76. and 100% ATR at 6,800. So I will probably be looking to position for, 6,800 or higher. Standard daily profit light today being Thursday. I preferred on Mondays, Wednesdays. I was a little bit bummed yesterday that we ended up taking a partial loss. We just, and it really, it was that 10 o'clock candle that was so bad for the trade. That 10 o'clock candle was a huge move. In fact, most of the day was quiet outside of that candle. That candle move all by itself was 0.2%. The day finished like 0.5 and we had a gap higher. So we had in 15 minutes, we had pretty much the entire surge at 10 o'clock was where, the day kind of positioned itself. So, and also I was a little bummed that, getting up here towards 55 and again to 55 and again to 55. I mean, we had a 65 by 70 sell, 70 by 75 sell. It's like I wanted to sell some bear call spreads, which weren't threatened, but I didn't get the fill that I wanted, trying to get a dollar credit out of a 5 wide so I can, kind of properly manage risk. None of those trades filled. So that was a bit unfortunate, but anyway, it is what it is. So tomorrow or today's a new day, and we'll see what we can get. What else here? Ernesto says, I uploaded my ATR levels on my Thinkorswim, but I don't see the level before the market is open. Really? I thought you could have the indicator up and running. You just have to go in and edit it. You're talking my daily profit indicator, right? You should be able to edit the indicator if you go in and edit it and just set it to manual. So just like I do here in TradingView, if I go to settings and the reference point instead of the previous day's close, set it to manual, and then you can type in the value. So I put it on the close at 6753. So I put this reference point manual 6753. You can do that on Thinkorswim as well. And it should print. This should be like the neutral start point. So you've got your 50% up and down. And that gives you your, ATR levels based on a 5-period ATR. And the VIX is right now at 1634. So that should be just over 1%. That is just over 1%, like a 1634 VIX would be. And this is just over 1%, like a VIX 1634 would be. 1634 rule of 16. 1634 is 1.02. So this box goes up to 1.02, goes down to 1.02. That makes sense? I would put the yesterday close. Try to do it manually. Let me know if it updates. So put it to manual and put it to 6753 since that was a close yesterday, and see if that will update. That should update your lines for you. Yep. Okay. All right. Very good. Yesterday, I think like 59% of the stock market was up. We had some big names. 59.6 were green, led by a lot of tech stuff. We had a big bounce back in semiconductors, tech across the board. Nvidia was up. It's fine. It was a bounce back. So we're sitting here at all-time highs. I mean, what makes the market go down? Maybe nothing. Oh, there's no non-farm payroll. The market doesn't care. Here's when the market cares this morning. If we drop below 67.45, the market cares. If we don't drop below 67.45, this is the zombie market and likely going to drift higher. Okay. So, and I don't know that. I don't know if the market's going to go up and find resistance. Look, I'm going to try to sell high resistance today. Okay. Why? Because if we drift higher, I think on the, plus minus 21, if I can go 30, 35, or 40 points up, get filled at a credit that I want, I think it's difficult for the market to reach those levels. Okay. If we use between my gamma levels and my ATRs, 100% ATRs at 6,800. So if I'm selling, kind of into those levels, I'd be taking on a little bit more risk at the, 80-85 zone or maybe the 90-95 zone. But I think it's going to be difficult for the market to get to, the 100% ATR. But it always can. It can always get somewhere. But today, without a huge gap to the upside, we're at 0.01 on futures. So I will probably look at, where can I sell to get some premium. I'll say this right now, I don't love that the plus minus 21 points on the day is not really going to allow me to sell. It really wouldn't even let me sell at the, 50% ATR. Because that's going to be like a 20-25 delta. So I want to go a little bit further out, maybe 85 by 90, maybe the 90s. So I go, 90 by 95, 6,800 by 6,805. Look at that level. If we are going to stay above, if we're going to stay above this 67.45 for the day and continue to march higher, that's not a bad support level. This market has been using this positive negative gamma pivot point as a level of support. Once we got above it yesterday, it was greater than the pivot there, and it proceeded higher. It bounced off it here. It bounced off it here. That was literally positive gamma, right? So, I mean, if we have this little tiny pullback and it bounces, well, there's a good spot. If you want to go out of the way, then you're getting down here. What I don't like is if we go to negative gamma and we start hunting for 67, 20, or 15 or 10, and this just becomes a range trade. Obviously I want to try to stay out of the way. So I think it is easier right now in this environment if we're going to go melting up, having a kind of an at the money bull put spread that we can take a decent premium for. And if price drifts higher, we make partial profit on that and then trying to sell nice and high for the day. Right? Like, I don't know why the market would all of a sudden turn and go south. But I never know. It's like, I don't like to make decisions on a day-to-day zero DTE when the market can get into here. The market can always be inside the 50% ATRs. So anytime I'm trading inside there, I have to be very confident that I've got a direction. Right now, the path least resistance is higher. Right? So are we going to stop at this week's high? I mean, it's been a couple day range. Does the market actually care? Like, is it just trying to find what it typically does week to week, which is Thursdays and Fridays? It melts up and finds new highs. If it does, I mean, we just do a pull put spread and find highs. But what I'm saying is, if we open up and the market's going to drift higher for the morning, I mean, I'm looking at these levels here. Let's see what else we have for the remainder of the week. Did you say today? I mean, it's probably not going to be a standard because it is a Thursday. I personally like to do my Mondays and Wednesdays are my standards. Usually, if I'm just going to go straight default trade, Mondays, Wednesdays are my standards. So right now, biggest level up here towards 75. This is pre-market, so there's my pivot at 45. Biggest level for price to find, and we don't have a gap necessarily because futures is pretty flat this morning. So if we're going to push into these highs, a bull put spread that's a pretty decent fill this morning, right? Like if I get $2.50, that's a decent credit. If we go up, we take a portion of that profit. I'm not going to sit on that trade all day, right? So at the open, if we open up and I can do a 55 by 50 and maybe pull in, $2 and change, $2.50, it's a 1-to-1. If price goes up to 70, 75, well, I take my partial profit. I'm not going to hold it all day. Okay. So that's not a bad trade. Otherwise, I will try to sell higher. If we see that price can get to 75 or 80, why would I want to put a bear call spread at 75 or 80? I don't want it to be threatened. So I want to go, 85 or 90, 90 or 95. I want my bear call spreads to be out of the way. Okay. Bodine says, I chickened out near the close, rolled yesterday's call side out to Friday. Oh boy. It's a gutsy play rolling a zero DT, man. I hope it works out. But what'd you roll it for? Did you roll it for a credit? Did you roll it for a debit? Hopefully a credit. Well, the reverse. So why am I not loving the reverse? Because our IV is down to 15%. Our plus or minus is down to 21 points. Unless I'm going to do like a $10 or a 10-point wide dead zone. If I want to get like $6 credit, I probably have to go 20 wide. That's all the market maker might be capable of doing today, right? So I don't know. I don't love it. I like reverse iron condors when we got more swings and volatility. It's like I think today is the day that I just if I embrace the melt up, here's the risk I'm willing to take. If I embrace the melt up, I'm looking at an kind of an at the money bull put spread. We go up here, okay, and if that's right, if we get a bull put spread and it pays, or we bounce off of this positive, we stay in this positive gamma environment, we bounce off of that. Well, there's two spots I would say would be my line in the sand for the bull side. At the open, if we're going to drift up to 75 and a pullback to the positive negative gamma pivot, which is 45. So between, 67.55 and 67.45. If the bulls defend that and try to stay green on the day, we'd have to see price, maybe heading up to 75 or 80 today. But once we are at 75 or 80, I want these trades to be closed for profit. I don't want to hold these things all day, because if we drift to the upside, fall back down to the gamma pivot, that wouldn't surprise me. Thursdays are a bit more, directional in nature, maybe a bit more volatile. I don't know. But let's see what happens. I've got to be able to embrace some risk a little bit this morning. I'm just trying to do it strategically. The bear call spread at plus or minus 21 points, I'm not really going to be able to go up high enough to take the sell trade that I really want. Okay. But I'll look at it. I want to look at what is the 15 delta? How far can I go up on the call side, on the put side? I'll look at the levels, and this would be the standard daily profit play. If it works out, it works out. Yesterday was not. Yesterday was a trade that directionally we went up to test. We were greater than the 50% ATR. I think the 50% ATR was right around here. So we closed above it. And then the 100% ATR was not reached. That would have been, so in my tracker here. Screenshot from yesterday. So we pushed up above the 50% and didn't quite get to the 100, but we stayed in between them for the close. Okay, so we'll see what today is. Let me update this here. Waterfall. We'll have I've got a masterclass on waterfall today at 1 p.m. Eastern time. And we also had pinch point has been filled up. We've got some pending orders here. We got filled yesterday on CFR. So we'll be tracking that as well. All right, let me go into daily profit play. I'm going to go into the ATR tracker. Today is the 9th. Get my levels. So it is 11 minutes before the open. All right. So 50% ATR is 67.76. 50%. 67.76. And 67.99. $68.23. %, ATR down is 67.29. $67.05. And the 150 is down below the VIX box, which is 66.82. Okay. So we shall see. All right. So this morning, as far as my technical reading, as long as we stay above 67.45, the biggest gamma level is to the upside, kind of melting up to this 75, 80, 85 area. If we looked at, and like I'm saying, there's two spots I'd look at. Either one is at the open, we look at a bull put spread, or we get a pullback to the 45, we look at a bull put spread. If I'm going to take this bull put spread, I want 250 credit. Okay. I don't want less than that. I think it's silly for me to take on more risk than reward if I'm going to get into the mud of inside the 50% ATRs. Okay. Where I accept the lesser credits is when I go $1 credit on a 5 wide spread above price or way below price. So out of the money, this is what I want to try to make. But in the dirt, I'm going to try to pull in at least 250. It's going to be interesting to see how it prices out, because if we open up futures at 0.04, 0.05, we might have a slight gap higher. So I just wouldn't be shocked to see we gap a little bit higher. Maybe we pull back here, and I look to see if that is defended. Okay. So we'll see. But if at least I keep the risk somewhat tight, where it's like, okay, I'm risking 250 to make 250, the probability of if we stay positive gamma, we bounce here, we finish green on the day, we'll be fine. It's just try not to get suckered into like that trade with taking on a bunch of risk, right? So I think between maybe a decent credit on a bull put spread and then some bear call spreads up here above price, that should work out pretty well. But we are in a 3-day range right now. So I mean, I see Thursday, Friday as this. Thursday, Friday is either continuation and we make new highs, or today is a complete reversal and we're coming back down to the weekly lows. I mean, I hate to say it, but it's like totally a coin flip. So opening up just a tiny bit higher, I don't know why the market all of a sudden would drop. You know, um, I mean, just everything is like all systems go. Gold is up, silver's up. It's like ridiculous what gold and silver's doing. Um, but it's been a fun ride. I mean, it sucks to look at it like, should I have gotten out? And the answer is yes. I mean, I protected a bunch of profits. And it's also, I mean, that position was established like literally years ago. So it's been worth it. Like the juice is worth the squeeze. Now it's a matter of, okay, well, now what do I do to position for fresh exposure? And I'm just going to use time. I think time is our friend when it comes to trading silver and gold. There's ways to use options. So I'll get that bonus trade in today. I'll probably do the January of 2028 expiration, which I know is way out there, but I think silver, gold, both at some point, we're talking about these, and gold's going to be at 5,000 plus an ounce and silver is going to be at 80, 90, $100 in the next couple of years, I would think. I don't know why the trajectory on that's going to change. Is it too late to get into? No, of course not. It's not. And what's ridiculous is I don't think these prices are. I mean, if you look out 5 years, I don't think these prices are high. I mean, technically, do I want to see a pullback? Of course, I want to see a pullback because we have 9 straight weeks of bullishness and we're stretched away. I mean, it looks like a broken chart. I mean, what looks like this outside of some parabolic meme stock? This is what they look like now. Gold and silver are trading like meme stocks. So, I mean, but they are the leading assets. And I mean, outside of individual stocks that have made these crazy runs since April lows, they are leading the charge with some of the best performing assets in the world. Gold and silver are both over 50% gains for the year. Bitcoin, I think, is at 30 plus percent. So S&P and NASDAQ, chump change, 15%, 18%. It's crazy, man. It is crazy. But it has happened in the past. We've had runs where the market for 3 straight years has had 20 plus percent gains. This could be one of those years. It could be another one. Dr. John, Pinch Point. So I did a live session this week, Dr. John, on Pinch Point. We had a live trading session. And so we have a bunch of trades that are in. I can sprinkle in another one next week, but I've got waterfall income masterclass today and tomorrow. So I'm doing masterclasses on waterfall income. Bitcoin's already done. I mean, is it done? You got a top on Bitcoin? I mean, my target on Bitcoin is 250K. My target on Bitcoin is $1 million. I mean, the same thing as gold and silver. It's like, do we have a top? Is there a top on an asset that could be appreciating? That could be, think about this. One of the best equalizers in the portfolio for the next decade or two could be just having gold, silver, Bitcoin exposure. Because if those assets continue to run and appreciate over time, the reality is we're losing purchasing power with our dollar debasement, and we have assets that alongside of it at least can appreciate. So things in life can get cheaper if gold and silver and Bitcoin appreciate. And it's going to be a wild ride, but I'd much rather have those aligned in a direction where if I have a bar of gold today, or even a trade on gold today, and for the next 10 years it annualizes 15% a year, 20% a year, that is awesome, right? Versus I lose 3 to 4% purchasing power every single year. That standard of living raise that you get at colleges, 3%. I mean, you're lucky. How many jobs offer that? Not very many. So anyway, this whole debasement thing is very real. And you wonder at some point how it all changes. I mean, the systems being put in place right now. I mean, it wouldn't surprise me if we have some type of financial reset and gold becomes more of like the gold standard. What we're doing with the Genius Act and these stable coins to basically force the hands of synthetically buying treasuries. I mean, we back it, but it's like that just gives us the free reign to have treasury buyers and grease the wheels of our debt bubble. You know, so I don't know. It's like it is like we are running. I don't know if this is we're running as the doors are coming off, or it's like we're actually getting smarter, better, faster, stronger, as we're just you know figuring it out along the way. It just it doesn't seem like there's a great plan, but I guess the plan to grow is a lot better than stagflation. You know, so it feels weird when it's like we're running this thing hot. Fiscal dominance, monetary policy is finally falling in line. It's tough to argue with that combination. It really is. So, be prepared for some volatility and pullbacks. But other than that, I mean, if there's no major disruption, I think we shouldn't fight this thing. You know, pullbacks are fine. Pullbacks are welcome, but we shouldn't fight this thing. Okay, we're gonna open up in here in 2 minutes. So again, as long as we stay above 67.45, biggest gamma level is up to 75.80. So let's look at the open. If I can do a standard daily profit play up high enough, like what I might do is set the levels that I want, put it at $1 out of a 5 wide, and look for that trade to kind of, if price threatens one side, I still get filled for $1. We'll see if that survives. And then on the bull put side, if I feel like this positive gamma is right here to offer support, then we wanted to see if we finish green on the day. Typically Thursdays and Fridays form the highs. So we, closed out, near the highs on Wednesday. That is my least favorite thing on zero DT is when we actually close at the high or at the low, especially if you're looking to trade a ceiling or a floor. That doesn't help when you're closing at the high or at the low. That doesn't help. So that's what always kind of makes me, a little annoyed with like the day of, okay, it didn't reject off the ceiling, didn't bounce off the floor. What happens on Thursday? I don't know. We'll find out. Yeah. I mean, we do. I mean, technically we need it. That's the thing is we need the pullbacks, just technically speaking. Um, the stupid part is it's just not coming. Not yet. But it'll happen. I mean, it will. It's going to happen. It's just I don't know if what forces it to happen is going to be some type of um, some type of like terrible news headline, right? Who knows? So anyway, let's see what happens. If we pull back to look at that gap. So we just gapped up to 63. We're pulling back a little bit. Let me see how high up I can go. If I can get into like the 90, 95 zone and get $1 for that, I might take that trade. Let me try to go here. So 90 to 13 delta. I'm going to go 90 by, see, 90, 95. I don't know if that's going to offer enough premium. So let's go 13 delta. So it offers 65 cents. If I go 10 wide, I'm going to take this trade at $1. So pending order at $1. 67.90 and 95 for the bear call. 25 and 20. Let's go here. 30 and 25. I'm going to go down. I'm going to go to this 25. 25 and 20. I'm going to try to get $1 on this trade. All right. So we have pending real gamma level, real time gamma level. I mean, if we drift up into the 50% ATR, we drift into 70, 75, we should be able to grab some profit on a bull call or bull, not bull call, a bull put spread this morning. I mean, what was that gap? That seemed like a kind of an excessive gap, didn't it? It opened up 0.16 and futures was up like 0.06. Son of a biscuit. All right. I'm just going to hang out for a second. So 80.85. So I have the 90.95. I'll put this in Telegram in a second for some members. So 90.95 bear call. I'll go 8. Okay. My VIX box. I mean, I'm trying to trade above the 100% ATR if possible. We'll see what the VIX does this morning. All right. I'm going to get some pending orders in. Coming in hot. Today is the 9th. 67.90. Okay. So pending order is in. I mean, right now the trade's offering like 65 or 70 cents. I want more than that, so I'm going to set it up at $1. And what I want to look at now is here's a bonus trade. I'm going on to silver. We're at 45.82. I'm going out to January 2021. I'm going to do a bull call spread. This is actually pretty freaking cheap if you ask me. I can pull in 350 to only risk $1.47. I'm going to take this trade in SLV. So 50 debit. I'm going to go after, see if I can get filled for $1.50. And let's go quantity. Okay. So $1.50 debit. See if this will fill. I can probably get filled at $1.55. I'll go to the mid. I mean, don't not fill me here. $1.60. All right. So buy the 45. Okay. So what's this for? Maybe $1.65 mid. All right. Just got filled at $1.65. Now I'll get this in for some other accounts. All right. So the trade that I'm taking right now, I'm buying the 45 call, selling the 50 call. It's a 5 wide bull call spread. It's $1.65 debit, which means I can make $3.35 on the winner. So I'm going to get these all filled. Come on, debit. right, just getting these filled up really quickly. All right. So I'll put that in the chat. If interested, this is a bonus trade. SLV, I'm going out to 121 of 28. So it's out there a ways. I'm buying the 45 call. I'm selling the 50 call. $1.65 debit. So $1.65 max risk, 335 max profit. If SLV is greater than 50 by expiration, keep full 335. If you want to take profit along the way, then I would say since your max risk is 166, if you have this thing showing a credit of 330, 165 debit times 2. Okay, if you see this trade showing 330 credit, you have a 100% winner. So you can take that along the way. You don't have to wait until expiration for that. So a couple ways I would manage that trade. Okay, I'm going to add this into my tracker. Buy the 45 call, sell the 50 call, 65 debit. Oh yeah, I did. I just meant to put it for everybody. I put it for, it was accidentally posted for hosts. Let me go everybody. Here it is. Here it is. Everybody see that in the chat? Okay. SPX. Let's have a look at today. Right now we're trading at 59. If I sell a 60, 55, I get over $2 on the trade. 65, 60, I get 265. This at least brings my risk down a little bit. If we drift up into, I'm going to try to take this trade for 250. I'm giving the market what? A 5-point head start. I'm going to wait. I'm going to see if we pull back to that positive negative gamma pivot and bounce off it. Then I'll take a trade. So I'm going to look to see if price will do this for me first. If price pulls back to the pivot point and bounces, then I'll look at a bull put spread here and then see if we work our way up to the 50% ATR. If all we do is we go sideways here and then work our way up, I mean, I guess I can take the trade now. There is a 12-point swing, and it's pretty sensitive in a 0-day environment to do those trades. Right. So I'm giving the market a bit of a head start. It's offering 280 right now, 285. But if I can go down by a strike, now it's 250 for the 260. We're only 4 points needed. So anyway, I'll hold off on throwing the trade in the trenches. I'll keep the peripheral one. So this trade is still pending. It's trading at 60 cents right now. If I get filled for $1, that's a pretty good fill. Ernesto, let me take a look. I'll log in to Thinkorswim. So give me the value that you have. Here's my trade view indicator. My 50% ATR is 67.72. What do you show on your platform? My up 50% ATR is 67.72. That's what you have. And then 67.90. Mine's at 92. Okay, nice Vivek. Minus 50, 67.35. I'm at 33. All right, I'll load up my Thinkorswim. It might be an ATR calculation between the two. Maybe my trade view had a default RMA, and maybe the Thinkorswim might be like an SMA. But let me see. 67.16. I'm at 14. I mean, they're close, but I get it. Let me pop in here for a sec. Yep, they're close. Okay, I'll come back to that in a moment. All right. Key decision making time. Are we going to bounce off of positive gamma today? We can find out. 55 and 50 is offering 230 credit. If we get down to that positive gamma pivot around 45, maybe I can do like the 50 by 45. If I can get 250 to $3 credit, that's a pretty good trade as far as risk on the day. Not awful. So 50, 55 is 215. I try not to give the market too much of a head start. You know, like if I'm in the money by 2, 3, 4 points, I mean, I shouldn't have to take on more risk than reward. All right, let me have a look at the platform here. So 72 and 91. 72, 92. Okay, yeah, it's got to be just the internal calculation, the ATR. I think there might be a slightly different default from Thinkorswim versus TradingView. This ATR is a 5 period, but you're talking like within 1 point. I mean, they are pretty close. All right, here's real time gamma. This is the make or break for this morning. If the bulls defend, keep it in positive gamma territory, then we find a low, we work our way back up to maybe intraday highs. We try to find our larger positive gamma levels, but breaking below this, getting into negative gamma, that 50%, 67.20 is gettable. So we'll see. Just not forcing a trade right now. 10-cent debit on waterfall. Good, man. Okay. Can we get back to 65 or 70? Can we get, I mean, are we going to get to 75 today? That would be a pretty volatile day. If let's say we bounce off 45 and we get to 75, it's like that's a 30-point move on the morning. But again, it's all relative to like plus or minus. So 52 to 75 is 23 points. We had a plus minus 21, 22 on the day. Hmm. Looks like selling high may not be offered today. So if I'm going to do anything brave, it would be maybe moving out through the ATRs down here. 67, I mean 90. I'll go VIX box. I mean, VIX box is around 84. We'll see. I mean, it might just not be a big move. It's just noise. Okay, so 55 by 50 is offering 230 right now. See what this is. 95, 90. Interesting. All right. So we're still not right at that. We didn't hit it yet. Right in the noisy chop zone. Kind of a messy day, huh? Well, let's see what else we can muster up this morning. On the call side, maybe go a bit more aggressive. 75 and 75 and 80. See if I can get a buck out of this one. So this is a 9 delta right now. Let's see. High today was 65. 75, 80. All right, I'm going to take a chance on this one. I'm going to go 80 by 85 for a buck. Bear call spread for $1. It's not filled, but I'm going 80 by 85. That's above the 50% ATR for the morning. Chart alarm went off UNH. No way, dude. UNH went to 460? No, that was weird. I said a chart alarm go off. Well, that's positive. I should have mostly profit on UNH. This was a ratio spread. UNH is up about 86% of max credit. This was one we took for Project Options Edge. 260 by 270 ratio spread. I can pull in. I do have the debit set at 65. It's trading for 85 right now. Not a bad trade. So about a 97% chance of profit. If I pull this as a winner, it's going to make about 550 bucks out of the max 615. I'll take that winner. All right, now we are down to the positive negative gamma pivot. This is the line in the sand for the day. Will the Bulls defend, or will they get a negative? I mean, it's literally a coin flip. I mean, the zero DT, the flows are pretty fierce every single day that it's like positive gamma, keep a positive gamma. But any crack below this, it's pretty open. It's pretty open to the downside. So let me make sure on the iron condor that we have the put side, especially I want it to be low enough. So pending at $1, 25 by 20. That's gettable. I'm gonna cancel the I'm gonna cancel right now. Hang on, just bear with me. I'm gonna cancel the iron condor right now. And let's see on the day. If I go bear call 40, 45. Let's go 15 wide. Okay. See if we can grab this one for like 620. That's 20 wide. Hang on a sec. So 620. All right. New trade. Pivoting. Here we go. New trade for SPX. 10, 9 expiration. 6740 call. 6745 call. 6760 put. 6755 put. 620 credit. So that's $1.20 max profit and 380 max risk is a reverse. So greater than 6760 or less than 6740. Okay. All right, keep an eye on that, Gil. I'm in this reverse. I just posted that trade. So this trade's live. I'll put a box in here. We are just below the gamma pivot. So if this rolls over and we end up hitting the 50% ATR, maybe into this, I mean, this is a pretty good call here to work its way down to 20. You know, if we're going to fall, we work our way down through the 50%. We fall into these gamma levels. 6720 is gettable. Okay. I mean, this honestly, it's pretty cheap. If we get like a 20, let me see if I can. This might be a good double up trade actually. So 20 and 25. So she might get filled for 80 cents on this debit. This is for double ups. I'm going to see if I can get filled here for 85 cents. All right. Double ups has a trade in. I'm going to make this an official post. You're welcome to take this trade with me if you want in daily profit. Deanna, here it comes. So double up, new trade, 10, 9 expiration. That is a buy the 6730, 6720, 6710. It's an 85-cent debit, 85-cent max risk. That is $9.15 max reward if end of day is pinned at 6720. Looking for price to fall into 6725, 6720 level. Okay, I'm going to look to see if that will offer up a 100% return. So if we are going to fall, and this is a big if, I mean, if price stops here and goes back up, that trade is going to be worthless. But if we get below negative gamma and we fall into my 67.20, that 85 cents could probably offer $2 to $3 profit. Okay. If you got filled in the iron condor, keep an eye on it. Okay. If you got filled for buck, that's good. You know, your put side is 20. Your call side was 90. I mean, you're still sitting right in the middle. So if price obviously chops back and forth, 64 to 4. I mean, it's already moved plus or minus 20 on the day from the high to the low. So if it's going to be one of those range bound days, then yeah, you're looking at that. So keep an eye on it. You know the mechanics. If you're in for a dollar, going after 80 cents, 75 cents debit, 70 cents debit. That's routine. Okay. The other trade that I'll post. So I'm going to do another one for double ups just to see if I'm going to play the downside, I'm going to play the upside. I'm going to try to pin this thing at 75. So let's figure out how we can do it. So 75. See how cheap this is. Hopefully it's probably like same price or cheaper. 75, 10 wide. Yep. So 85-cent debit here. All right. Deanna got another one coming in for double up. Double up. Buy 6765. Sell 6775. 6785. 85 cents debit. This is a call fly. Convert price to reach 6770, 6775 for 100% return or better. All right. So let me get these updated. So 10, 20, 30. Um, 40, 45, 55. What is that? Oh, the reverse. Okay. So I've got the 40, 45, 55, and 60. 40, 45, 55, and 60. And this is the call fly. Okay. So today, call fly, put fly, inverse for daily profit play. What I'm looking for is between this trade and this trade, can I seek a net profit? So if price is coming down towards 67.20, this 85 cents should be offering probably close to $2 or so of profit. What I'm trying to do is net out profit. So I'm in for $1.70 debit. So if I can get one of these trades to offer $2, $2.50, I'll take that as a winner. So let's try to go after, see if we can go after like 275 credit. That give me $100. And this one for 620. See if I can close this down for, I'll go 530 debit. Okay, yeah, those butterflies are debits. They're not broken wings. They're for double ups. I'm doing the debit butterfly spread, so they're equidistant. Okay, so what do I need price to do? Well, I need price to be below 40 for my daily profit play. So if we're below 40 or we're above 60, right? If we are above, get my boxes here. So below 40 or above 60. Below 40 or above 60. So I need price to be outside of that box. If we're going to go lower, I have a butterfly trap down here. I have a butterfly trap up here. Right now, you can see in real time, the gamma has switched to positive gamma above the yellow, negative gamma below the yellow. So we're just into negative gamma right now. And what is filling up in real time are my trades here. So the 67, 20, 15 zone, if that gets hit, hopefully that butterfly spread will offer, a triple digit winner. Okay, I'm going to take a screenshot of this just as a quick reference. I know that looks like chicken scratch, but this is at least my outline for the day. If price is falling or rallying, we hit between the 50 and 100% to the downside, or we find a way to rally back above into positive gamma and we try to hit the 50% ATR at 67.75. Those butterfly traps are waiting. Later in the day, they offer even more profit. Potentially this trade can offer up $9.15 a profit, $9.15 a profit. My risk is 85 cents. So they're very low risk trades. But obviously I need to see price, by later in the day, if price can, get close to one of these levels or within that 10-point net, that's a pretty good win. Yep. So I've got a put fly, call fly in for double ups. Bill, Deanna, did you post both? I've got a call fly and a put fly for double up. I did both. So the pin price on the call side is 67.75. The pin price on the put side is 20. So if we get to 75 or we get to 20, I'm looking to see what the trades offer up for profit. If it goes absolutely nowhere, then guess what? That's not good. That's not good. And I'm in the dead zone of my daily profit play. So there's my risk on the day. Let's see if we have some direction on a Thursday, which I'm hoping that we do. If you're in the standard daily profit play, keep an eye on that one. Hopefully, price is going to be too aggressive one side or the other for the morning. All right. How's baseball season going? It's nearing playoff time. I haven't been able to stay awake for a World Series game in like 5 years. I know they have a pitch clock now, which should be different, but anyway. All right. So, daily profit plan. Today, we've got a couple trades running for daily profit play. A call fly and a put fly for double ups. Waterfall income. I'm running a masterclass on strategy 1 today. Waterfall income strategy 2 masterclass tomorrow, 1 p.m. Eastern time. All right. That SLV position, I'm going to make that official. You had it here as a bonus trade. I'm going to make that official for Project Options Edge. I'll do that right now. That is Project Options Edge here. Okay, that's in for Project Options Edge for SLV. So for the day, let me box in a couple of things here. I'll box in my 30, 30, 20, 10. So if price comes into this zone, I should have some profit on the put fly. Price comes into this zone around the 75. There. So my butterfly spreads, we should have some profit in either of these two zones. And if you're in the standard daily profit play, price stays in the middle. That's good. I have a dead zone where I want price to be less than 40 or greater than 60. So I want to stay out of this dead zone for the day, if possible. I mean, honestly, since we're into negative gamma right now, the best scenario would be we just slide a little bit lower, and I can grab some profit on the put fly, and maybe close out also a winner on the daily profit play inverse that I did. Okay. All right. Like I said, on the day, waterfall income strategy 1 today. We'll dissect that a lot of different ways. It'll be 1 p.m. Eastern time. I'm looking forward to teaching that class as I always do. One of my favorite strategies, one of my favorite deployments. You can call it, active retirement income. You can call it steady indexing, steady dollar cost averaging. You just continue to participate in the markets. We're going to see over 100 winners probably in the next 30 to 60 days. I don't think I had those trades filled yet. I don't think. SPY. So it's trading at 13 cents. I put it down to 7, 10 cents down to 5. So they're getting closer, but the probability of profit on both these trades is extremely high. So there's like a 99 chance of profit. I'm just going to keep it. I'll take, 45 out of the max 50, 45 out of the max 51 or 52. So that's looking good. So class today at 1. If you're not in my waterfall income, I love to have you in the class. It's nothing but positive feedback. It's a really easy strategy. We'll talk, like I said, the reason I'm teaching the 2-day workshop on is because strategy 1, strategy 2 are very different. Strategy 1 is essentially you like the direction you're in. You play the market for what it is, which is right now in melt up mode, and it probably will continue to melt up higher. We'll have some flushes and some pullbacks here and there, but stay the course. And then strategy 2, strategy 2 is just ultimate forgiveness. I've traded strategy 2 through all the recent bear markets. 2022 took 10 months, and I took 1 loss in 10 months. And I also hit like 5 profit traps. So strategy 2 paid very, very well in 2022. I also survived through, 2020, 2018, 2016, 2015, 2016 was a 20% range from highs to lows. I didn't have a single loss in those years with this strategy. So very flexible. It's to me, this is like really reliable income with a high percentage profit. Okay. David, the masterclass link. So it'll be inside your classroom if you have waterfall income. The access to the Zoom chat will be inside the classroom. Okay. All right. So I'll talk a few minutes about it here. We have 92 winners locked in the service. I've got 94, 93, 94, 95, 96 all pending that should be closed out here hopefully in the next 20 to 30 days. And then the trades that we have listed right now that have been stacked up, we should have over 100 winners in the next probably 30 to 45 to 60 days. With a